Welcome to Prime Suspects. Alongside Adam Bjorn and Prime Sports co-founder Joe Brennan Jr., I'm your host, Matt Landis. Adam, we'll get to the NFL draft, but first, the leagues where consequential games are currently being played, the NBA and NHL playoffs in full swing, including Wemby's concussion and return, a pivotal Game 5 at Madison Square Garden tonight between the Hawks and the Knicks, and the Buffalo Sabres on the brink of eliminating the Boston Bruins after snapping the longest postseason drought in NHL history. All in all, how have the NBA and NHL playoffs played out over the past week for Prime Sports and BetChris?
So over the past week, better. I think in the beginning there was a lot of chalk, a lot of favorites, whatnot. There was some good upsets last weekend that had some good results bearing fruit. Obviously, our exposure on the Lakers looks like it's going to live potentially another week or another round. But yeah, all in all, it's been good volume, some good upsets. We had the Anaheim Ducks get us up on a day to play Sunday night. Love sweating those games when they're easy in the end. But yeah, it's been a lot of fun and good action on the weekend, and just keep pushing forward.
And speaking of events that took place over the weekend, we will now note the NFL draft is in the books, probably much to Joe's delight based on his comments last week. So, Adam, how did it go for Prime Sports and BetChris in terms of the biggest results that worked for you and against you?
So we won, like, surprise.
Oh my God, really?
And I think the key turning point was Carnell Tate getting taken at 3. It just seemed to disrupt the other pieces after that, because then Arvell Reese was available where there was potential of, someone else going when he was favored, I think, at 2 or 3. And that kind of just messed it up. So generally, a lot of people are betting based on, 1 or 2 theories, and that one tossed the pieces around, whatnot. So, and then there being a, second QB in the first round, and I don't think it went to plan as many had sort of suspected or planned out. And it sort of started with that third pick, I think.
All right. Well, speaking of Reese being available a bit later than some people may have expected, I wanted to get your point of view on a losing bet I made, less about the result and more about the process and where a top-down approach may or may not have merit in a market like the draft. So to set the table, on draft day, early afternoon Pacific time, I saw the market for the number 2 overall pick start to steam pretty hard on Arvell Reese. My recollection from monitoring this on Kalshi was seeing odds in the mid 50% range pretty quickly move into the high 50s, then into the low 60s. And I'm talking a matter of minutes, if not seconds. And I saw millions of dollars in liquidity, which suggested to me that there was more signal than noise to all of this just a few hours out from the draft beginning. And underscoring what appeared to be signal, a lot of sharper traditional books also seemed to be moving similarly. So I felt like I was basically watching the horse leave the barn in real time. And then I recalled one of many lessons I learned from legendary handicapper David Malinsky. He would talk about how it paid to have what he would call a get back book, basically a book that's slow to move when you've otherwise missed the best of it. And I found Reese to go second at a well-known offshore at minus 120, equating to a 54.5% break-even probability, or a break-even of less than, let's say, a delta of 7.5 percentage points or so from the Kalshi price at the same exact time. So when the team held firm on Reese and even increased, I think it was like 68% or so when the pick was being announced, I felt good about the process. Then, of course, it felt like a gut punch when David Bailey was the second overall pick. Adam, if I set the result aside and fully acknowledge that CLV entitles me to nothing as a bettor, especially in a market like the NFL draft, where does it sound to you like my process might have been sound, and what blind spots might I have missed along the way?
Matt, it's a sound process. It's worked many a times for many a decades. And I'm not trying to one-up you here. However, I went last minute thinking, let me check out my Jamaican sportsbook and see what they have. Oh my God, did they have some hangers. And going back to my previous comment, it was actually pick number 4 that I think messed up a lot of the table for a lot of people.
Carnell Tate, yeah.
I had things that were, plus 170 market wide, hanging at plus 400 in Jamaica. I went 0 for 11. So yeah, I mean, these are the times where don't give up on that process. I don't think it's broken. Yes, there's a lot of top-down things that when you're trying to trust and put faith in other, sources of truth and things like that, it doesn't always work. And I feel like this was just one of those things that, again, the second pick didn't go to the way that the market was going, which then moved it. And then the fourth pick I think it was 25-1 or something. Carnell to get taken at fourth spot. So that really just blew it up. And then, I had another player to go at 5 for the Giants, but Reese was available. So why not take him at that point? And then I think, the 6th pick was way out there. And then it just kind of spiraled from there. I had Jordan Tyson going, much higher, and had found him at really big odds versus the market. But that's sort of the way it goes. And that's where in these spots where playing Jenga and you're picking one out and it wobbles and then you pull another one out, someone took a chance or a risk on something unexpected, then the tower crashes on you and you have no choice but to take what you took. But I think you did everything that I would recommend doing to people playing that top-down role in a lot of spots. And shit happens, and we just have to put that one to the side and say, okay, next time that comes up, keep watching it, circle that book, make sure not many other people find it. They got you this time, but I'm sure you'll get them more than they get you in the long run.
It's funny to me how when people are discussing this, like, okay, I didn't get the result I wanted, but was the process correct? Sounds to me like the big league pitcher who, on throwing his first pitch to Willie Mays, who then turned on it and drove a home run over the outfield fence, said to the reporters, for the first 61 feet, that was an excellent pitch.
I like to think, Joe, that I approached that one with a bit more of an open mind, but I hear where you're coming from on the trials and tribulations that Adam and I experienced with our offshore accounts and the NFL draft. So let's shift gears to the regulated market. Last week, we had the announcement come in that Caesars will take over the iconic Westgate SuperBook in Las Vegas, and this caught a lot of people off guard. How surprised were you by the news, Joe, and what do you make of it?
I was only slightly surprised in that it was Caesars that was taking it over. And maybe surprised isn't necessarily the word so much as disappointed. I mean, it's been no secret. SuperBook has been trying to find a buyer now for several years. First, their digital business, then packaging their total business. The number of folks that have reached out to me, especially over the last 2 years, in scrutinizing the deal, taking a look at it, I mean, it's been a pretty long telephone list. It's very disappointing to see, the SuperBook, which was Circa before Circa, kind of go this route and how they're going to get. I mean, I guess everybody assumes that they're going to get averaged down as a sports book, the way Caesars sports books already are. The fact is that SuperBook has already been averaged down as a sports book, which is a real tragedy. I remember right after legalization, one company shared with me a brand equity study, and SuperBook had the number 2 highest brand equity when it came to sports betting in the United States, and that's because of 30 plus years of great coverage, especially around the Super Bowl prop markets. They just had real deep brand equity, and it should have been a no-brainer for that to be a winning brand, but they just never seemed to find their feet. And now, it's kind of like you've seen it before where, a once great property, once great brand is now being kind of sold off for parts. My hope is that, hoping against hope, is that Caesars, A, keeps the SuperBook brand, and B, invests in it to kind of restore it to what it once was. They're seeding the market to Circa in so many ways, everything from the contests to being the home of like the biggest sports book in the world to, being the home, a place that would take a bet from a sharp bettor here and there. But I just have to say my hopes are not high. And in the end, I was not surprised by this deal.
The angle that I'd heard, and again, right or wrong, whatnot, is that they went after it partially is because of the contest as well. And they're looking to take that contest across the Caesar brand, across the nation as well. I don't know how much regulatory licensing and all those kind of things to be able to do that. I know in a conversation, Joe, that we've had in the past about the contest and the possibility of host world and what that. So I did hear that was sort of one of the reasonings or one of the things that they sort of liked in that package. But yeah, I learned by the many signal chats, Telegram chats, things going, what the hell, we just lost another one, meaning out, because this was still somewhere that it was a different number they could get down for something. And like William Hill did many years ago, it just, slowly took over the Las Vegas Strip and the world there to go from, I remember it was like probably 20 something sports books, individual prices that you could get walking the streets 20 years ago. And then it got down to 7 or 8 pretty quickly. So it's kind of the way things are moving forward. And unfortunately for Vegas bettors, they've lost another one and they don't have some of the others. You know, a few of them very cautious on the predictions, playing into that aspect because of what's happening there on that. There's no DraftKings there. They got to drive across the border for that. So the leader for so many decades in the sports betting world, they're really getting knocked down pretty quickly.
And from that Caesars surprise to a Sportradar scandal, activist short sellers Muddy Waters and Callisto Research last Wednesday published reports alleging Sportradar knowingly serves illegal gambling operators in black and gray markets. Sportradar stock fell 22% on the news, wiping out $800 million in market cap. And in response to the scrutiny, the company has bumped up its Q1 earnings call from May 6th to today, April 28th, after we record this conversation.
No, actually, it already happened this morning.
All right, I stand corrected in real time. Joe, let's go to you first then. I want to get Adam's take on the story more broadly, but understanding that the Sportradar story sits at an awkward intersection between the integrity narrative on which the major US leagues have built their gambling partnerships and the messy global reality of sports data. Of note, Sportradar has integrity deals with FIFA and most major leagues. If even half the allegations stick, what do you think this means for the leagues and the broader regulated industry story that US operators have been telling lawmakers? And then tacking on one more part to a loaded question, since the call already did take place, my mistake there, what do you think the odds are that the earnings call actually puts much of this to bed?
There's the smoke, there's the fire. The fact is that Sportradar's business has been well known and an open book, frankly, since I read their first prospectus back pre-2018 when they were reaching out to private equity for raising capital right when legalization was happening. It's even outlined in the, I was watching a video that one of the short sellers had put together, and bravo, these short sellers, they're really leaning into their multimedia campaign here right now. None of this is particularly new news. It's all old news. Like Sportradar splits out some of the gray markets and what their revenue performance is in it. Like, for instance, in the video that I was watching, they highlighted what their revenue growth was in India. India is not a regulated market. And I think one of the problems that you have here right now is I don't think of our industry as being particularly difficult to grasp. There's not that many moving parts when you compare it to something like an Apple or a Microsoft or a Google or something like that. But there still seems to be a lot of incredulousness by folks in the public markets when it comes to talking about our industry and how they understand it. The vast majority of the world betting market is unregulated in a sense that it's not regulated like the way the United States is, okay? But, most of these operators, that, for instance, at one point they cite 188, which is rebranded to TapTap. They have an Isle of Man license. Now, whether they respect that license, whether they respect the Philippines license or any of those things, clearly they don't. But this is the way the industry has operated now for the better part of 20 years. There's nothing new on the table since Sportradar sent out their perspective for their IPO. And so I'm not defending Sportradar. They're a data product. They're not a betting operator. So they're providing data. They're providing scores and things like that. And then apparently also integrity services. I don't know that those are mutually exclusive propositions. I mean, if they were a spy agency, would you want a spy agency that had its fingers in all worlds, not just the shiny, bright, clean, regulated world, but also the unregulated world to detect these movements and things like that? But I don't particularly, think highly of their integrity services, but Sportradar kind of set themselves up for this. When you have their CEO saying that they're the SEC or the FBI or depending on whatever interview is, agency policing world integrity. And then at the same time, they're selling these products into these dark markets. But this is something that's been around pre-IPO. So I don't know. I get why the short sellers are doing this. I get why they're making the noise. This is an opportunity to do a good short It's at a time when it seems like the wind is in the sails of people in other parts of the betting industry, i.e., prediction markets, and not necessarily in the picks and shovels guys supplying run of the mill sports books. So it's a great opportunity for them, but they're really picking at a scab that was already there, already open, already there for the whole world to see. So I don't know what's different today than was different 5 years ago than when they went public.
And Joe, since you were the one who's on the ball here, knowing the Q1 earnings call has already taken place, what are your initial takeaways from it, knowing it did just happen this morning? And since they made this move, what do you make of the decision to go ahead and bump it up from the initially scheduled date a bit into May?
Well, Matt, maybe I should do one of your instant checks. Like, I know the results were released at 8 a.m. this morning.
So just to update you, they missed their Q1 earnings by a lot.
I was about to say that. They swung to a loss.
They are down 13% stock price so far today, 30% on the month.
And that was after getting pounded and dropping nearly a quarter of their price last week when the short seller reports were first issued. It had stabilized after that drop somewhat. But then when the results were released and they had swung to a loss, which they were trying to attribute to, I always love when you hear this, like, oh, it was foreign currency exchange caused us to miss our numbers by as much as they did. It does not sound like necessarily that is the case, but it is always one of those throwaway tweaks that they can make. So there doesn't seem to be an awful lot of faith in this one. It seemed like the market held its breath. And even with announcing that they were going to increase the size of their share buyback, which is usually a great way of, juicing the stock price back upwards. People want to get in on a sale since it's going to be a market buyback. Nothing. So there's nothing, other than obviously the numbers, the basis of the short sellers report, there's nothing new there. Actually, like watching the video, you do wonder if these guys are this incredulous about this kind of a simple business, how are they able to conceive of, or how are they covering, more complex businesses like the AI, business, AI infrastructure, technology, microprocessor, things like that. It's not really compelling content if you know this industry.
Adam, want to bring you into the fold a bit more here as well. The Muddy Waters report alleges Sportradar's sales team pitched products tailored to operators in Vietnam, Thailand, Indonesia, and China, kind of along the lines of what Joe alluded to, all of these markets being ones in which online gambling is banned. So from your point of view, how serious are these allegations? And how does the picture they paint of Sportradar's business practices in black and gray markets match what you've observed?
So I thought everyone knew this. When I was reached out to last week and someone pointed me to this article, I thought everyone knew that they all operated in the black, the gray, the everywhere else. I thought everyone knew that they had secondary companies or subsidiaries that sold to these jurisdictions on purpose. So, my question more about them, and I had no idea that they were a $4 billion company, but are they replicatable? Are they really protecting the moat that they're building? Because it just feels like a natural short of, it's not worth this much. It shouldn't be worth this much. They don't have a ton of proprietary stuff. But I guess the question is, on the MTS side, really, which is ultimately the part where they're actually making revenue share from these operators in these jurisdictions that are spoken of. Because on the MTS side is where they take a GGR and NGR of the bets taken. So does that make them not just a data company providing the picks and shovels to a place? They're actually there, hands-on trading to these jurisdictions through the partners that they have. So, I'm sure now when you go to G2E or ICE or any of those things and you say, I'm coming to shop for, there'll be a little round group of, do we know this person? Like, I thought this was all common knowledge, and I think that they just got caught with their pants down because that's just open conversations that they're always having in that nature. So I just thought everybody knew, or at least a vaster array of people understood where these things were getting sold into. How much of their share price is that worth? How much of their revenue is that worth? No idea. But this isn't unusual. I think we're getting to the point in the world where regulators, and probably in the US, they're looking at these companies and they're licensing Bet365 because, okay, you've got less than 4% of your revenue comes from a questionable location. I think this is happening. I think it's smart for regulators and other groups to look at these companies and say, it's going to happen, let's try and capture the bigger piece of it. You're doing a lot more good than bad. But for me, when it came to Genius, Perform, Radar, who else do you think these places are getting their odds from? I mean, yes, there's L Sports, who I'm sure will openly say that they sell it to every Tom, Dick, and Harry on the planet, and will do it at a much lower price than what Genius and Radar and whatnot will. But I mean, there is no magical places out there that are accumulating and aggregating these prices and selling them to the .ios, the .ags, the whatever they are existent in the world. It's just part of the business. And I guess I was naive enough to just thought that everybody knew what happened in this industry, but there just seems like there's a cloak over it that people that just don't get into the space just don't know. And now they've taken a step in there to try and catch someone in what they think is a nefarious position or whatever else they think it is. It's just an everyday at work.
I don't want to seem like I'm defending those guys at all. But if you're going to run an integrity service, would you only want an integrity service that monitored the shops in regulated jurisdictions? Or would you want integrity services that were monitoring the shops everywhere? Where is it most likely that you're going to see some sort of nefarious activity happening? Probably in the dark markets. It's not going to be on fucking FanDuel in New Jersey, right? But another thing, what this betrays, like when you see the short sellers, when you see the people who bought into this, when like the narrative that Sportradar was selling when they went public. It's interesting that you mentioned MTS, Managed Trading Services, for those of you in our enormous audience of dozens who don't understand what that acronym means, where Sportradar is actually doing the trading for the operator. That was the big growth narrative in their pitch book when they were going public, is that they were going to get in all these shops and they were going to be managing the trading themselves. They were going to be the risk managers, and that they were going to be getting a share of the revenue. Well, that turned out not to be a particularly popular product here in America, but it does seem to be somewhat popular in these darker markets. And that's where they're making their, profitability. Also, there's a kind of snottiness when they talked about the tiering of the sports. Tier 1 sports were like, the NBA and Major League Baseball. Somehow the NHL is a tier 2 sport. But they're saying like, oh, well, they're not making much money off of those guys. Where they're really making their highest margin is off of tier 3 and 4. And there are, things like ping pong and handball and bandy and things like that. That, yes, they're not particularly popular here, but they are in other parts of the world. So there's a kind of provincialism that is evident in these short sellers. And what they seem to be saying is well, Sportradar is doing business in places that don't look and operate like America. Right. Most of the world doesn't look and operate this business like America. But it's, again, this has been there from day one, from everybody to see, from their first prospectus looking for private equity through their most recent financial reports, the most recent annual reports. They openly say they're getting revenue from dark markets. So again, I'm not defending them. I always wondered why people invested in this business, how it got that incredible valuation in the first place. And it was because of the irrational exuberance with the opening of the U.S. market. And I think a bunch of people in the public markets who, frankly, didn't do their homework. They listened to the narrative, kind of like what we're hearing about the prediction markets here right now. They listened to the narrative and they just bought into the narrative without reading deep into the numbers.
All right, well, from a thorny situation at Sportradar to the 152nd run for the roses, Adam, Renegade is the 4-1 morning line favorite at Saturday's Kentucky Derby at Churchill Downs, but through the dreaded number 1 post, which hasn't produced a winner since 1986. Further Ado and Commandment are the second favorites at 6-1 each, with Chief Wallaby at 8-1 and the Puma at 10-1, rounding out the top of the board. How's the action looking across Prime Sports and BetCris? And as a bettor, which angles are catching your eye for this weekend's Derby?
So across Prime and BetCris Arizona, our volume is 0 because we're not allowed to do it. So just making sure to clear everybody out there.
We're not doing anything illegal.
Again, we get some action through BetCris Latin America on this, which again, they're in some countries that still have a bit of a horse culture. Volume's been good. Put up the matchups yesterday. Got the usual suspects coming in, whatnot. I didn't like Renegade from the outset, especially at the price. like him a lot less in the one, although I think it doesn't hurt him as much as what people are making it out to be. I don't think he'll be favorite come post time on Saturday. I think Commandment has a nice draw and will end up getting that. But when you look at Commandment, I mean, him, Chief Wallaby, the Puma all ran pretty close together in their Florida races. So I think it's potentially one of the worst fields we've ever seen in a Kentucky Derby, or definitely in my lifetime, which is why I've sort of been throwing around Dannon Bourbon, the Japanese horse, a little bit. And I'm surprised the morning line was as high as what it was. But yeah, I think this is going to be a very open race. From what I see, the weather's going to be good and no rain or wet track will come into play, which is something I always love seeing each year. Not when I'm there, but the other years. But I think it'll be a good race, and I think it's a very open race, and I'm not scaring anyone away from taking some shots at 20 and 30 to 1 shots, because I think this field is just kind of, blah for some horse like that to kind of come in and do something. So the first horse I backed in my futures some months ago was Silent Tactic, and he's hovering around the 20s, 25 to 1s as well, which probably tip into him again if he's still hanging around those prices. But I like it. It's an open race. I think there's plenty of chances. If Renegade wins, congratulations to him. He's a hell of a lot better horse than what I have him for, and we'll see how it all plays out.
And Joe, pivoting back to earnings season to take us home today, DraftKings' Q1 earnings report is Thursday, with Flutter to follow on May 6th. Wall Street has been trimming estimates, citing soft handle, and we know BetMGM's Q1 already set the tone with a full-year revenue guidance cut. So from your perspective, how possible is it that the DraftKings call becomes the moment that the narrative prediction markets are eating sportsbooks lunch either gets cemented or begins to crack? And what does this mean for the legalization fight in the states still on the sidelines?
I think unless there's something uncharacteristically outstanding in their growth, which is unlikely because they are the maturing businesses here in the U.S., you're probably going to see, regardless, the narrative continue that the prediction markets are just eating into this. And this is all because of the, live by the sword, die by the sword, the way that they quoted handle for so many years as being like a leading number here rather than revenue. The odd part is that they're increasing their revenue even with declining handle, right? BetMGM did the same thing. So, I mean, I guess in that way, they're not like, original drilling. They're more like fracking, getting more out of the ground with a bit more work, but it's a better yield or something like that. So, it also means that they're relying ever more on the parlay business, on multiples, and, a concern that one might have. Do people get fatigued by that product because it is such a difficult product in order to be successful in if you're just a square recreational bettor? But yeah, I would imagine that regardless of the other results that those two companies report, you're just going to continue to hear the drum beating in favor of prediction markets because their numbers, which again are not understood when they're talking about volume, it's the same way people are talking about handle, even less so because, there's only a fraction of that volume actually being filled with matched orders and the double counting volume. The way that they count that, it's like, what is the revenue at those shops? When people finally start taking a closer look, getting past this initial narrative of, the prediction markets and their ascendancy and looking at how are they really making money? How are they really profitable? Then things are on maybe a more equal footing for consideration between the two, but I don't expect it to slow down anytime soon.
We will go ahead and wrap up on that note. So to the audience, whatever the rest of Q1 earnings season has in store, and whoever you'll be pulling for in the fastest 2 minutes in sports, enjoy the Derby on Saturday. Thanks as always for tuning in, and we'll catch you next week. Thanks for listening to this week's episode of Prime Suspects. Register for Prime Sports at primesports.com and download the Prime Sports app. You can follow us on Twitter at @PrimeSuspects_, at Joe Brennan Jr., and at Adam Bjorn. You must be 21 or over to play on Prime Sports. Always bet responsibly and within your limits. If you or someone you know has a gambling problem, call 1-800-GAMBLER.